Hey guys, in this video I would like to compare debt funds versus fixed deposits. Which is the better place to actually invest? So before we actually compare, we should actually know what both these instruments are. Fixed deposit, as most of us know, is provided by banks where you open a fixed deposit account and as the name suggests, offers fixed interest for whatever you deposit. So it's kind of fixed based on tenure, age, and amount of deposit. Example, a bank might offer 7.25% as interest for regular customer, whereas for senior citizens, it might give little more. Again, if it's for 1 year deposit, less than 50 lakhs, the factors differ, and that's where the maturity terms and conditions comes into play. Anyways, let us spend some more time on debt fund. Debt fund is one type of a mutual fund. The moment we hear the word mutual fund, we feel there is a lot of risk that is involved in it, and it is dependent on market conditions, the way how the stock markets play around, and the way how the volatility, the stock crashes, etc. Whereas there are a lot of things that we need to know when it comes to mutual fund. One main thing is not all mutual funds fall in that category. There are many categories of mutual funds. One of the categories is actually a debt fund. Now, what happens in a debt fund? In case of debt fund, the fund manager invests in Government of India secured deposits or securities. It could actually be in terms of larger companies or trust deposits that are more secured in nature. Right now, what are these? What are these investments? Let me give you an example. Like for example, say there is a metro rail that needs to be built, right? So government actually raises funds through these bonds. They kind of offer these bonds and say that I have this much of bonds and you can actually purchase them. And they are actually not available for individuals like us, but large fund houses or large companies, they go and invest in those government securities. They are obviously very secured, right? And debt funds invest in such securities. Now, what is the advantage for us? Advantage for us is it is not market volatile. It is not dependent on stock market or the stock on how a particular stock is performing. Each of these instruments uh, have a star rating and that determines the risk for it. The fund actually takes care of it. And as I said, since they don't invest in equities, they are not what you call volatile based on the stock market. Now, unlike fixed deposit, debt fund is not fixed. It's variable, and you can actually check the value of our fund on a daily basis. You can actually know how the funds are performing where you have actually invested in. We have historically seen debt funds give more return on investments compared to fixed deposit. Debt funds can be deposited or withdrawn anytime. There may be a very nominal fee called exit load if it's withdrawn before 1 year. There are some funds which are another type of debt funds called liquid funds which don't have this exit load at all. The main advantage what I would see in terms of uh, debt funds versus fixed deposit is the net returns after tax. We all are subject to tax. The moment you have a fixed deposit, you add the entire interest income into uh, the tax slab. So the total income, including the fixed deposit income, is taxed based on the tax slab. If you're on 20% tax slab, you would pay 20%. If you're on 30%, you pay 30%. What happens in case of debt fund is if you have invested for more than 36 months, it's considered as long term. So any gains in such income is only taxed at 20%, and that too after indexation. So after indexation, it should be somewhere between 12 to 14% based on the inflation and the market scenarios. Debt funds do carry risk of return fluctuations based on interest rate scenario. However, if you see from all the perspective, right, bottom line, debt funds actually give good returns and advantages compared to fixed deposit. I would say the key is to identify the right fund to provide you the returns beating the fixed deposits. You can watch out for my video on how to select the debt funds and invest them such that they have better chances to beat the fixed deposit related returns. Thanks everyone for watching my video. Continue to look for similar videos and subscribe to this channel.